So you may have heard about Silicon Valley Bank all over the news the last few days. It is a very shocking story of one of the largest bank that went from like top to like nothing in as little as like a day and a half. So today in this video, I'm gonna help you recap what's going on and to explain to some of the folks who may not have known about much about the bank to help you catch up to speed. So there are three components to this video. Number one, I'm gonna talk about what SVB is, a little bit about the history of the bank. Secondly, I'm gonna talk about what actually happened. And then lastly, I'm gonna talk about what's gonna happen next. What does it mean to the rest of the VC world and the customers. So with that being said, I like to start out right. Number one, SVB is like the 16th largest bank in the U.S. based on Silicon Valley. It built a banking franchise around startups, right? Companies, founders, VCs, firms, and the tech world has always been the bank's bread and butter. So as the industry kind of boomed last few years, right, SVB grew into a really strong bank. And to give you a lot of interesting statistics, they accounted for nearly half of the country's VC-backed technology and life science companies. So in other words, for startups, VCs, all roads kind of led to Silicon Valley Bank one way or the other, right? So if you think about what happened during the COVID era, the tech boom that happened, right? So the deposits flow so much into the bank, literally triple in about 2 years to about like $190 billion. To give you a perspective, I'll put it in a little chart right here. As you can see, before 2020, you barely get under 5 billion per quarter. And then after 2020, you can see the increment, pretty crazy. So among the customers, one of the largest customers is Roku. They had about $500 million held in there. So I'm going to show you another chart right here. This is a very interesting chart that also explains what happened. Part of it, what happened to the craziness that happened to the environment, the bank, and the VC companies going on here. As you can see, majority of the deposits are not insured. Roughly about almost 90% is not insured. And I think compared to industry standard, only about, I would say less than half is not FDIC insured. So you can see that there's pretty big discrepancies between what they are, where they are versus like the peers. So what actually happened? It took the bank about 4 decades to become the startup world preeminent financier. And it took them about 36 hours to lose everything. So the culprit is really the mismatch between how they handle deposits and assets. Essentially the building blocks of commercial banking. It is the second largest bank failure in the US history. Only after Washington Mutual Bank way back then. So as I mentioned previously, in the last few years during the tech boom, there was just so much money coming in, and the bank didn't really know what to do with all that cash. They could not lend it out fast enough to make money, right? To handle that money. So what did they do? They decided to basically pump the money into the super safe treasury and 30 years mortgages. And if you followed the news recently, you probably know what happened. Jay Powell and the Fed has recently been, raising interest rates, and they have no sign or decreasing anytime soon. So what happened to the treasuries and mortgage that they bought? Because interest rate went up, value went down significantly. So the tech world just started to tumble right after all these mess that happened. And deposits fell, and all the values just started dropping. And I can show you in this next chart right here to kind of show you what happened to the price of the bond value that they bought versus the market value. You can easily see from the discrepancies in the gap that the value went significantly lower than how much they invested the money for, therefore causing a concern of their inability to pay back to the investors. Another part of the problem that we didn't have in the prior crisis is social media. Because back then, when something like this happened, news wouldn't spread out as quickly as it did with SVB, right? So basically, with what happened recently, through social media, all the customers got spooked, and then they started checking on the phone, their banking apps, and then with a few taps in the way, they were trying to get the money out. And then word spread out, people get more, more scared about what's going on, so more money started withdrawing. Their stock that was closed at about $267 on Wednesday crashed when the market opened. The panic grew, especially in the West Coast, right? And literally, I think their stock went down to, at the time I checked, it's roughly like 30% of something. And I think even like Elon Musk kind of offered or suggested he might be interested in buying this company now. It's another crazy story. So then, at the time, all the VC fund pulled their money out, and they also suggested their portfolio companies to do the same thing. And at the time, obviously the company didn't have enough money on the balance sheet to kind of cover that, right? So then customers start freaking out, things get crazy. It gets through the loop, non-ending loop here. And to kind of show you perspective of how much money that was flowing in and out, please look at the next chart here. So if you look on the far right, about $42 billion was attempted to withdraw on March 9th on a single day. That's the level of magnitude of how big the problem is. With such a large volume that's being withdrawn, every startup investors are trying to squeeze out the money. Unfortunately, I do have a few friends and people I know that are impacted by this. Some of them are startup investors, or they have their own startups that they're running, or people who work for startups that have the funds basically frozen by SVB. So the story is pretty crazy. Let's talk about what's going to happen next. Unlike the other crises that happened in the past, they're not going to get bailed out this time. At least that's what the regulator said right now, especially by the head of Treasury, Janet Yellen. So it could be a good thing, it could be a bad thing, right? There are two sides to the story. So now they are holding auction for SVB's assets, trying to raise money to pay back money to people. So if we recall the chart I mentioned earlier, only 10% of people who are or have the fund that's FDIC insured, and then roughly 9% does not. So for the portion of people that have the fund insured by FDIC, they can get it paid out essentially by Monday, which is not a bad thing. They will have the money, nothing to worry about. For the rest of the fund though, about 90%, it's going to take some time until they can sell the assets to raise the money back. In the meantime, they will probably get some advanced dividend to try to ease out the pain. But of course, right, it's not enough for them to kind of run the operations. So some VC funds are offering assistance to the portfolio company in the meantime, and also to advise them to diversify the money, right? I mean, we talk about this all the time, like don't put all the egg in one basket. This is what a lot of the companies did. And then some companies are trying to solve their problems by, unfortunately, having to borrow very high interest loans to cover, the operations, to pay the employees, which is not an ideal situation, but you have to get the business going in the meantime, right? And also UK is offering some assistance. So London Bank, or Bank of London rather, right? They are partnering with another PE company to try to buy the UK arm for SVB. I mean, this is such a large company. They are too large to fail like this. So everyone's trying to do something. Regulators are working. The VC parent companies are working. Everyone's trying to figure out what's next for them. So I'll keep you guys posted next when when by Monday, I think we'll find out more about what happened to the assets and to the customers. So until then, hopefully this video kind of give you a perspective of what happened and the magnitude of how important this is to the economy. And hopefully we have some good news for the customers to recruit the money. If you find my content helpful, right, please hit like and subscribe, and then to stay up to date on some of the news on the tech world and also some of the career advices. Thank you for watching. Bye-bye.